Okay, so we've dropped what we'll be looking at for this week. But before then, we should just quickly go and do DXY, see what DXY has in store for us. Last week, DXY, let's see. All right, so last week, this was our analysis. We more or less saw price was basically where this arrow started from, and it had created a highest high right about this point with the X. And we saw we're anticipating that price will either go higher and therefore create a higher high, or we're anticipating that price will break down. And we said if price breaks down, there is a gap here, there's a fair value gap at this point here, and we're expecting price to come fill it up. And that was exactly what price did. So it broke down, gave a retest. Upon breakdown, we have our source up here. Right, so we have our source up there. Price broke down, a retest of the breaker, and price fell off. So presently on DXY, let's go to a higher time frame and see if there's anything else. So on the higher time frame, DXY is presently in this zone. There's a possibility that we could see some reaction, some pushback, and then fall even further. On this way down, it created a lot of gaps on the upside. So there's a tendency that it may want to go back to fill them up. For now, based on what we can see on the chart, DXY is still bearish. We will only change our mind on DXY if price breaks above this. So we have, we basically have an order block here. If price pushes back and closes above that order block, then we'll become bullish on DXY. As it is presently, price may push back up to retest the order block, and then it could resume the bearish move to fill up the gap that has been seen here. And if it fills up that gap, it could as well come back to fill up this market imbalance here, price imbalance. There's a price imbalance presently here. Let me magnify a little so you can see more clearly. Right at this point here, at point X here, there's a price imbalance that DXY may want to come and fill up. And if that happens, that connotes more bearishness for anything USD XXX. That will be what we have there, right? So basically, based on institutional order flow principle, we are still bearish on DXY, right? So bearish on DXY means that we expect the USD to be weak. We quickly go to fundamentals for the coming week, right? So fundamentals for the coming week quickly. Like we rightly predicted last week, that we'll be having some major negatives. If there's anyone we spent so much time on, it was on the unemployment rate, and of course, we saw the skyrocket effect that had. So on Monday is basically clean, just some few GBP Euro news. NZD has a red folder on Tuesday. That's 1 a.m. If we don't trade Asian session, we might not have anything to do with that. USD has a news about 3 p.m. consumer confidence. You could see that they factored in a drop already. It was initially 130. they factored in a drop to 115. So it's possible that the consumer confidence could drop and still not have effect on the dollar. The effect will only come when the actual is lower than the forecast. They've already priced in a drop on that, right? Same thing for this one, non-farm employment change. They expect a drop too. So this has already been factored in. The drop has already been factored in. It was positive 183,000, and they're expecting a reduction by 125,000. So even if this figure comes out negative compared to last, that is the previous for last month, it might not create as much ripple as we would expect because it has already been factored in here. However, if it drops beneath a negative 125,000, then we might see some effect. So basically, USD has factored in a drop on virtually everything. The PMI also last month was 50.1, and this month they're expecting 48. So is also they factored in that drop. And you notice we don't have so many red folders on other pairs apart from USD. USD seems to be featuring virtually every day. Unemployment claims, in fact, the last one was 3.28 million, which was how many percent? Several percent higher than the previous one. No forecast for now, but I would expect that these figures should increase. There were some persons that didn't file for unemployment claims as at last week. I expect them to file this week. And if the number remains, then we should have something slightly higher. The forecast is negative. I believe forecast will be populated before this particular date. So we'll be watching this also to know. Now, why are we doing this? Is because we want to have an idea of what we expect the USD to do. I will not say anything concerning NFP. We'll be doing another Zoom on Thursday. Having seen what would have happened from Monday to Thursday, by Thursday evening, we should have a fair idea of what the non-farm payroll will hold for Friday. So that's that on fundamentals and DXY. We are still bearish on the DXY, except if price tells us something. Now, why do we take this approach? Why don't we just want to hold on to one bias and say, okay, this is what I want to do? It's simply because as retail traders, several times, we don't even know how to analyze the fundamentals. And common examples, there are several examples that have happened this year. You know, we had AUD one time, it was like rates were dropped, and we're expecting that, okay, since the interest rate was dropped, then it should weaken. We later saw that it strengthened for like 1 or 2 days, then it began to weaken. Sometimes we find it difficult to analyze the fundamentals. And since we're in this market, not just to analyze fundamentals, but to take pips out of the market, then wisdom demands that for this level as retail traders, if we can't analyze the fundamentals, we should at least be able to analyze candlesticks, right? So the candlesticks are what is what the institutional order flow strategy is all about, telling us what price would do. So we'll be starting with UJ. We'll be starting with UJ. Let's go to UJ and see. So last week, we were bearish on UJ, obviously because we anticipated USD to weaken. If you can see my screen right here, you notice USD is the weakest currency at 1.6 here, right? 1.6. I have a currency strength table somewhere there. You will notice the USD is the weakest at 1.6 there, right? And CHF is the strongest at 6.6, then GBP. So UJ for this week, would notice, all right. So we'd notice that UJ broke through to give us a breaker, right? A bearish breaker. And after then, we began to sell. This is one order block that was formed. It broke through. So we basically have another order block here now on UJ. This is on 4 hours. So we have another order block right about there. So if the bearishness continues, we might just see a push into the order block and a drop. And that might be in tandem with what we might want to expect from DXY, right? So two scenarios, either it just goes down straight, for which case we might not have an entry on Sunday or early Monday, but we'll wait for a pullback into a pullback of a sort for us to find an entry perhaps on Monday or Tuesday, right? So we are not in a hurry to just trade. We want to trade what we understand, what we seem to understand. So presently, this is the breaker, the order block, I beg your pardon, and it has broken through. We'll be expecting a pullback to give us an entry either in between, halfway into this, or even to the end of the box. At that point, we should be expecting to see one form of divergence or one form of shark fin, and last step broken on the 15 minutes to take our sell. If you followed us last week, we mentioned that UJ seems to be a long sell because we see some gaps here, right? I'll use a different coloration for this. We see some gaps at that point. If you don't understand gaps, you need to go look at the video we did last week, right? I think I retitled it How to Be Patient and Wait for Your Target. I'll be doing another one in 2 days' time, perhaps on Tuesday, to dig deeper into void, gaps, and price imbalance. So we have some price, some void here. We have another one here. And of course, we have liquidity at this point. So each of these markings are where price would eventually get to, right? If you're like me, once you get here, you want to scale out almost all of your profits and now wait to see what price will do. So we have a potential 550, 560 pips potential for UJ, except if price does something otherwise. So UJ is basically bearish, right? If you notice on the 4 hours, let me quickly do something here. Indicator list, edit. Let's come here, change this to white, and change this to white. So on the TDI, on the 4 hours, you notice that the blue line is underneath. If we go to the daily, let's go to the daily, right? It's just approaching the red line, rather, is just approaching, it's still above 50. So an indication that the bearish move, you know, is still on, right? That's that for UJ. That's that for UJ. Is bearish. If you marked up your chart, you could use this as a form of guide. Let's quickly, for the sake of completeness of our markings, let's get out our our breaker. So that point becomes our source. I beg your pardon. Source, breaker, and we are bearish. Next one we'll be looking at will be card JPY. Let's look at card JPY. Now, card played something. Last week, we were hoping that US oil will have some form of boost. Unfortunately, it didn't really. I don't know if Saudi Arabia and Russia are having some discussion on the ground, but presently now, everything on the daily happens to be just the coronavirus. So we're anticipating for price to follow this drawing we have here. But price didn't do that. Price just remained within this source. It has given us a break already. So it's been retesting the source ever since. What we're expecting was that price will break out, retest this. Then we're hoping that the price imbalance up here would have been filled. However, price didn't do that for last week. So we'll still be watching. With China gradually opening up its business, could that mean some form of demand for oil? But that could also mean that with that could mean some demand for oil. But with US and UK planning shutdown for some weeks, that could also mean some drop. So plus minus, will it leave us at zero and no movement? Well, let's wait to see. The present world is just witnessing coronavirus for the first time. We can't really predict with some level of certainty how the world will react. However, we have the charts to tell us what to do. So this was the source we marked up as at last week. This was the breaker. Price broke above it. We've not gotten a retest yet. I will surely want to see a retest before deciding to go bullish. Presently, it's still like in a bullish trend because this breaker has been broken, has been formed. However, I want to be very, very careful with CAD JPY. With this strategy, we really want to see a retest of the source or the breaker to confirm that we are fully bullish. As it is now, it hasn't really done that. But from price structure, we are basically bullish. And by price structure, I mean we have, let's change this to white so it could come out easily. So we could say we have this, right? And we have this that hasn't taken out this point, right? So if I see this, then we might just assume that this is a bullish move and continue to ride it up. So for now, CAD JPY is bullish, but I would really want to prefer to see a retest of the breaker or the source to confirm with some level of certainty that we are fully bullish. So you notice on CAD JPY and CAD CHEF, which basically does the same thing, I'm indecisive. CAD CHEF also will just be like the same thing, right? So that's CAD CHEF for us there. We have the source, we have the breaker. In the case of CAD CHEF, I think it has something slightly different. This is going to be the source. This is going to be the breaker which has been retested. So if I'm to pick within CAD CHEF and CAD JPY, I would rather pick CAD JPY for a bullish move. But remember also we stated that we would prefer scenarios where the breaker and the source has some form of intersect. That way you have some level of confidence that your retest has been done once and for all. Price could as well just come back to give us a double bottom and push up. But for now, we are still bullish on CAD JPY. So we're expecting a retest of our breaker, perhaps a second time. Then we'll get a rally. If I'm going for a rally, my first take profit will be the previous high for that uptrend to stand, right? So if I have to choose between CAD JPY and CAD CHEF, I'd rather want to go for CAD CHEF, having seen a retest of our breaker. Now, so we'll go back to AUD USD. It should be pretty straightforward, having analyzed DXY. Now, ladies and gentlemen, if you don't take out the time to analyze your pair, when you're in the heat of the moment in the market, and candles will keep forming, bullish candles will be forming, bearish candles will be forming, you would be confused. You won't have a clear-cut idea of what you want to do in the market. All right, so this is, let's clean this up again. Sorry. Let's quickly clean this up. All right, so here we are for AUD USD. AUD USD gave us our source here. Then we had the breaker. Now here we have a scenario where the breaker is very, very far away from the source. So that gives you another opportunity, another reason to want to be careful, right? So bounce, bounce, gave us a breaker, retest. But all in all, we are bullish on AUD/USD. I will be a little bit confident about this since we've done DXY, and we are hoping that USD will continue to remain weak. And if that happens, we should see a rally of the continuation of the rally of AUD/USD, and that could take us up all to this point at least, and we'll be having a potential 400 pips or thereabout to play with, right? So when market opens, I'll be looking for opportunities to buy off AUD/USD, and I'll be monitoring DXY simultaneously to see what DXY does. So if price comes back to this breaker, I'll be looking for opportunities to buy. Now note what we said. We're saying that we'll be looking for opportunities to buy, not that we will buy. We have our entry conditions, 4 entry conditions we look at for on the 15 minutes. We have 4 entry conditions we look out for on the 15 minutes. We had one on Thursday, I think, for AUD/USD. We had one on Thursday to give us a buy, and I will just use that as an example. Here we are on Thursday. Price made its way down, and we're bullish off AUD/USD. Let's magnify this a little. So we're bullish off AUD/USD. You would notice that price was making lower lows, and TDI was more or less like flat, right? In fact, it was making a lower high. If I bring this here, you see exactly what I mean, right? So at that point, price was making something like a higher high, and this was making lower lows. That gave us our divergence on TDI. When we get our divergence on TDI, the next thing we begin to look out for is a last step broken. And that last step broken is basically a breaker, a formation of a breaker on the 15 minutes. Now, if you have a condition like this, your breaker automatically would have been this spot here, this last bullish candle before the rally. Now, for persons who have used this strategy for some time, you'll be more comfortable with using this spot here as your breaker, right? It's just some few pips away. Now, so your stop loss will be, you'll be waiting for price to break above your breaker and a retest, then you buy. Your stop loss will be from your entry to the lowest low. That will give you something like 40 pips, and your take profit to be 2R. So your take profit to be 80 pips, and this will give you 80 pips or your previous high. Remember, 80 pips or your previous high. Your previous high here was 165 pips, which this gave, and 80 pips will be somewhere in between. You would have gotten out here if you use your 2R. And if you're looking at your previous high, then you'd have gotten out at this point at 163. That is AUD/USD for Thursday. Now for Friday, we also had another reason to buy on Friday. Once price pierced into our breaker, we had opportunity to buy. We will have gotten an entry on Friday here. Let's look at it. So here is Friday, and what happened? Price also created a lower low, right? Price created a lower low, And at the same time that price was creating, let's bring this here, you notice what is happening here. Price was creating a lower low and TDI was creating a high. Price was creating lower low, TDI was creating a high. That is a very classical example of divergence, right? TDI was creating a high. So at this point, we have our last step broken to be somewhere here. The last bullish candle before the lower low was created. And our stop loss is going to be from that point to this. That will be 53 pips or thereabout. Our take profit will now be 106 pips, which this actually gave us, right? So this makes a lot of sense trading ADUSD for last week, right? So that's how we do take our entries on the 15 minutes. But for today, we're not looking at just entries. We're looking at the pairs we intend to look at. So I'll be bullish AU, and coincidentally, same thing will be happening to NU. I'll be bullish AU and NU. A similar scenario to taking place in NU. This is NU, right? So NU, we have our source right about here. We have our source right about here. Then we have our breaker here. So price just broke above the breaker. Now remember, instances like this are very tricky. Why? You expect price, your breaker and your source are far away. However, price has inched up enough. Price has given me enough reason to show that this is a bullish move. You see, we have that point, that one. We have the second leg not taking out the first leg for the W. Then we have a higher high, which takes out this high, giving us our second wave. So what I would expect, in fact, we've gotten this leg. If it ends here, then this will be a valid push. Then we are now waiting for this, right? We have a potential of price getting all the way to this point. And if price gets there, I see no reason why price will not take out the liquidities here, right? So last week, a friend of mine took U-card and he held it for like 400 pips. And so if you've been following us, you understand how you can hold your trades for that long. So if you have something you're looking at as your key area of price, you could take profit once you get your 2R, take partial profits when you get your 2R, then hold and be patient for price to do what price would want to do. Already I see a gap here. I see a gap here for that price may want to come and fill, which is a very good place to hold on to. So for NU and AU, we'll be looking for buy opportunities. Now let's go to EG, Euro GBP, and see what the candles are telling us. Remember that these buyers will change if price violates any breaker or any other block. So if price violates any other block, automatically our buyers will change. So we are not sticking to this. Is supposed to be Euro GBP. Let me just call EG back on here. So EG here and EG here. EG here. Very good. Thank you. All right, so this is Euro GBP. And for Euro GBP, we had our source up here. We had our source up here. Then we also had our breaker happening almost simultaneously. These are the type we say we want, where the breaker and the source are close together. Right, so price broke. Notice like we have in NU, price broke, created a high, and even fell further. But will only be very comfortable to take a sell upon a retest of our source or our breaker, which basically happened here. So this is the breaker. Price came back to retest the breaker. And from this day onwards, we are sellers in this market. sell, sell. So when price broke beneath this point here, we'll begin to mark up our order blocks. Right, we'll begin to mark up our order blocks. And you can keep marking them up to see what price did. Keep marking them up to see what price did. So we might see a pushback to test that order block and a fall off from there for Euro GBP. And that might mean that the GBP will continue to be strong. The GBP presently closed the market at 5.6 strength on a scale of 10, and USD was the weakest. Yeah, somebody said IC market has a different breaker for EG. Very, very well. You notice I have like 3 brokers seated, and usually I do a lot of comparison because sometimes you might just have something different. Somebody says my EG chart looks different. Let me come to FBS. Let's go straight to FBS and see what EG looks like on FBS. Yes, it's a valid one. It's a valid observation. Let's wait for EG to load up and see what EG looks like. See what EG looks like on IC market. Oh, very good. So this EG on FBS looks pretty different, and I'll give you my view about the difference there. Right. So anytime you have a gap in the market, I usually try to find a way of just disregarding whatever that gap would have created. Now, if you notice here, there was a gap on EG. Let me clean it up a little so I could explain better. This information should be for people who are in the mentoring class, but since it came up, I could as well just explain this for free. So notice that there's a gap here. If you understand your Forex 101, how price behaves, price opened, closed, at the same price or the same point where price closed, the second candle will open, right? So notice that, close, open, that. But notice this particular day, price closed here, but opened at the top of this bearish candle, right? And if you understand how to trade gaps, price will usually come back to fill up the gap before pushing. So based on that knowledge, this bearish candle could be seen as bullish. And that is what you are seeing with these brokers. So this is EG on this EG 4 hours. 4 hours EG. This is EG on IC market. This is EG on FBS, right? On FBS. So we just have this on Infinite having a different kind of coloration. However, yes, I will agree with you that this is how EG should look like. Where is it now? With some of your brokers. So let's go to FBS and do our markup. If this happens to be what your broker has, still okay. You have this point here as your source, right? Then you have this point here as your breaker. So with this, price came, gave you a breaker somewhere around here. If you are not convinced about that, because this could actually be like a stop point, now you have a clear-cut breaker here. 2 4-hour candles, did a retest and dropped. With this, we are still bearish on EG. With this, we are still bearish on EG, whichever way you look at it, right? Whichever way you look at it. But remember what I said concerning gaps. Sometimes it could cause some confusion. There was a gap here that this broker did not feature, right? But it was clearly shown on Infinite. Let me put period separators here and see if that will bring anything up. So there's a gap that happened here. But whichever the case, if you pick this point here as your breaker, you still would have had a breaker here, a retest of your breaker, and now you are dropping, whichever way you prefer to look at the market. So thank you for bringing that up. So EG is basically bearish. UF, so maybe we should just stick with FBS for now. UF, that's USD chef, should be bearish too if we expect that the USD will continue, the DXY will continue its bearish move, then USD chef should be there. Of course, chef was very, very strong the later part of last week. So if we go down to 4 hours here on UCHEF, we'll go to 4 hours on UCHEF. FBS seems to be hanging. All right, so we're back. So 4 hours on UCHEF. Very good. So on UCHEF, let's mark this up quickly. We have our order block, our source. Source is supposed to be a bullish candle, right? So I mark up the bullish candle. Notice that the highest point here was formed by a bearish candle. But with what I just explained now about gaps, you notice that there's also a gap here, right? So this bearish candle was just a way of filling up that gap. Everything here is bullish. Everything here is bullish, right? So this is my bullish move to give me my source. So I'll quickly change that to blue, our coloration on source. Then we have the last bearish candle before the push up being our breaker. The last bearish candle together with the wick to the right. And this happens to be our breaker. Right? It happens to be our breaker. We had a false break here. And you could also take that to be a major break, whichever way. It broke, then went back, did a retest on the breaker and the source. Sorry, this is supposed to be yellow. I love this because it meets our entry, our own criteria. We want it to retest both the source and the breaker, which it did. And really did that, it began to drop. So now it's time for us to mark up our order blocks. So this will be an order block. This will be an order block. We had the retest of that order block. I mean, I'm talking about this. This was an order block. Retest dropped, and it gave us another order block. So permit me to use just one box for this, and we are bearish. So on UCHEF, we are basically bearish on UCHEF. There was a gap here between, assuming these are A candle, reference candle, A and B, there was a gap which price has basically filled up. I can't see any other price draw aside this liquidity here. So there's some liquidity sitting down here, and there are some other ones sitting down on this particular quarters point, right? At 93250 is another liquidity point. So we could see price pulling back up to retest the order block. We could see price pulling back up to retest the order block sometime on perhaps if there's a gap up or sometime on Monday, and then we'll see the continuation of the rally up to this point or this point. Whichever the case, we have a potential 280, 400 pips to catch off this point, right? So we have all of that to catch at that point. So I'm still bearish UCHF. Like I mentioned earlier, if you notice to the right of my screen, we have GBP at 6.4, CHF at 6.1, USD at 1.7. If USD continues to remain weak and CHF continues to remain strong, then we have good reason to sell, good reason to continue our sell. So that's that on UCHF. Let's see how would have gotten some entry perhaps on this. Would we have gotten any entry on this after this was when? Which date was this? 26th. So from 26th, or rather from 25th or even 24th, we were sellers. From 24th, when we had the push up to retest the source and the breaker, from 24th, we're sellers. We'll go down to 15 minutes and go down to 24th to see how we could have gotten in for this sell. Right, so this move here was the push up, the retest of the source and the breaker was what happened here on the 24th. So we had the retest of the source and the breaker. We basically had no entry on this day. We had no entry too on this particular day. We also had no entry on this day. So our first entry would have been on this particular day, right, on Friday. But if we use our novel entry technique, we would have gotten an entry on UCHF, right? So on UCHF, we would have gotten an entry starting from 20. When we got a retest of the source, we would be looking for only sell signals from 24th. So only sell signals from 24th. If we come to 24th, we'll be looking for sell signals alone from 24th. So this happened outside the kill zone. We wouldn't have gotten in. Now, this happened in New York, in London. Would have gotten in for this sell, stop loss up there, take profit. Our entry would have been from at this point. This will give us 30 pips, and we'll hold on to this trade for 2 hours, which is 60 pips. I would have gotten that the following day, somewhere around there, right, during the Asian session. Right, so we had another entry on this particular day. We had another entry here. Our entry would have been here. Stop loss would have been 32 pips. Take profit again. That was another entry, and this happened clearly during the kill zone of London. If you don't understand what kill zone means, go look at our YouTube page for further explanation. We would have gotten another entry again right about here. Only sell signals. Our entry would have been from here. Stop loss would have been 35 pips. Our take profit would have been 70, and would have arrived at our take profit. So if we use the novel entry we use for people who are in our mentoring class, you would have gotten in for a sell on each of those days. However, the one we've made public, you might not have gotten an entry per se, because we didn't really have the type of entry we wanted. We had a shark fin here, quite all right. We had a shark fin at that point and could have taken this point. Shark fin created here. Shark fin also created here. Then last step broken would have been somewhere around here. Stop loss at above, then take profit. You know, so whichever way you would have traded that. But let's continue. We're not looking at entries for today. So GJ, let's look at GBP JPY. GJ, what will be our bias for GJ based on the institutional order flow. And of course, from here, we don't have so much that may want to affect the JPYs. During the day, most JPY related news would have happened sometime during the Asian session. Right, so GJ here, sorry, I need to take out these things again. Take out all this. Yes. Okay, so GJ, clean bullish scenario. Clean bullish scenario. We have our source here. We have our source at that point. Then we have the breaker. Large bullish candle. Boom. We have the breaker there. Right, so all of these were retests of the breaker and it failed. Then it was still an order block for a sell. We had one push to the other block, then a sell, another push to the other block, then a sell, and it finally broke at about this point, right? 1, 2, 3 candles closing above the order block makes it a breaker. Now we are buyers from that point. So we're buyers from that point and we're still buyers, right? So we have basically an order block here. So upon a retest of that order block, I will be looking for opportunities to buy, right? If price makes any move down to retest this order block or even further deeper into the order block, the threshold, we'll be looking for opportunity to go long on GJ. Let's see on the daily time frame if there's anything for us to watch out for on the daily time frame. So on the daily time frame, we can see some gaps there, right? So all these points here, there is a gap here, right? There's a gap here to be filled on the daily time frame. And price may gravitate towards that point. There's a gap here. And if you can see clearly, there's another gap somewhere around here. So basically, all of this point here is basically a place where price may want to come to, right? Price may just want to come all the way to this structure here, right? And being a GBP related pair, that is something sweet to know because this is about 1,000 pips, about 1,000 pips. So we are bullish GJ. We are also bullish GU. We analyzed GU last week, and I hope some of us actually caught some things from GU. GU was sweet last week, very, very sweet last week. Gave us very clean entries on the 15 minutes. Gave us very clean entries using our TDI entry technique and also using our novel entry. This was our analysis on GU, right? We looked at it from two angles. I remember saying that I prefer marking my order blocks up to the week of this candle. But I also said I know some persons that would use this smaller box here as their breaker, right? So if you were like me and you use this point as your breaker, let me make that a bit thicker to separate my view. So this day gave us our retest. This gave us our breaker, right? That happened like on Thursday. He gave us our breaker on Thursday using this. If you had used this smaller box, then you had your breaker even on Friday. And what you were having was a retest of your breaker and your source on late Friday into Tuesday, and we became bullish thereafter. I wasn't bullish until Thursday. So we had a breakout and a retest for a buy, right? So if you go down to 15 minutes, go down to 15 minutes on Thursday, it was It was so clean, right? So this was the push down and a shark fin on Wednesday. Push down and a shark fin on Wednesday. This doji-like candle there happened to be my breaker, right? You could see I had it marked up already. That was my breaker there, right? So I was waiting for price to trade above it. Price actually traded above it. And once price traded above it, just put your buy limit or buy stop. Buy limit, I beg your pardon, because price will come back, retest, and you are going long. Now, GU, the stop loss was heavy, right? Stop loss was heavy, 200 and something, but the take profit was also heavy. If you didn't want to take that, you could also have gotten another entry on this particular day too. You could also have gotten another entry using our novel entry technique, and that would have been for 20, sorry, that would have been for 26. So on the 26th, we also had our entry here for GU. We're looking for opportunities to buy. So when you came back into London session, around here, you have your buy signal here. Stop loss would have been beneath either at this point or at this point, and you'll be holding for a move. Of course, the Fibonacci trend told us that the trend on the 30 minutes and 1 hour were all bullish. All we needed to do was just trade along with the trend. Remember that the trend is your friend. But you don't even need all these Fibonacci, blah, 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 because on the 4 hour, you've already identified that you're in a bullish territory. So let's see, on the daily, where do we anticipate GU to get to? Fine, we have a source somewhere here on the 4 hours. On the 4 hours, we had an old source. We have an old source on the 4 hour. Let's minimize this a little. Right, yeah, so we have an old source on the 4 hour and of course an old breaker here. Would price do 100% move back to the source? Will it be possible? Very, very possible. We've seen price do that several times in the market. So we see price could come back all the way to the old source, that's 780, or even the breaker, and that's about 670. Now we could also see some price imbalance, right? So you could see a gap here, right? Like again, you don't understand gap, go watch a video on Tuesday. I'll be doing another video on gaps and basic general PD arrays. So here we have a gap. Here we have another gap again. Here, these are points of take profit where price could get to and decide to make a U-turn. Here we have another gap here. And price has just closed this gap. Notice how price, let me shoot this up so you could see. Do you notice how price got exactly to cover this gap? Immediately it got there, it stopped. Why did it stop there? Who knows? Who knows? But price came exactly to cover that gap. There's a gap between these two candles, right? Price came there, touched it exactly, and stopped for the day. Why? So could it be getting to this point? Could it be getting here? Could price be moving all the way to this point to close the gap there? Or will it come down here? All these are possibilities. And of course, if you trade price market structure, this was a previous low here, and price could as well just want to get to that previous low to resume the sell down if you assume that this is a long-term sell, right? Price might just want to come back and take that. So for now, I'm still bullish on GU, and this is supported by a bearish DXY. So bullish on GU, bullish on GJ, and of course, UC was sweet last week. We analyzed UC last week, Sunday at about this time. We analyzed UC, it was sweet, and I hope we actually took something out of it. It would be a shame if we do all this work, spend all our data, and we end up not trading these things. We looked at UC last week. UC was sweet last week. right? UC was sweet last week. Let's see UC coming up. All right, UC on the 4 hours, very, very sweet. Notice as at last week, we had our source already, and we had our breaker already. This was the breaker. So as at last week, we were anticipating a retest of the source, and price came there, and price gave us a wonderful M. So those of you who've gone through our beat the market maker Steve Monroe's method, you understand that this M, it gave us a sweet M with the second leg not taking out the first one, right? And at this point, we'll be looking for opportunities to sell. We'll be looking for opportunities to sell right at that point. We're looking for opportunities to sell. So, and UC gave all of this sell, 500 and something pips, 500 and something pips. The sell actually started on the 23rd, or let's say 24th. So if we go down to the 15 minutes, we look at 23rd, 24th, the very first sell opportunity for UC was here. If you use beat the market maker method, Steve Monroe's method, you would have gotten, seems my network. Can anybody still hear me? Am I still audible?